AI are capable of taking over any works that are being done repetitively. And we understand in accounting fields, there are a lot of works we do are actually repetitive works. Those will be taken over by AI. In essence, you have to be expert in exploiting your minds to analyze, to make decisions, and to solve problems. Only by having that, you can survive. Now, with all those challenges that you are facing, the question is now, what ACCA can do for you? Now, let me say this. If you are a member of ACCA, you can take advantage of the comprehensive knowledge and the full resources, expertise that they have. They have all the technologies that are needed in helping us to face our challenges.
Selamat datang di UPH Semanggi, kampus khusus program Pasca Sarjana S2 dan S3 yang terletak strategis di pusat Jakarta dan sangat mudah dijangkau dari kawasan perkantoran terpadat di Indonesia. UPH Pasca Sarjana berdiri dari tahun 1996 dan telah meluluskan lebih dari 5.000 alumni profesional. Saat ini, UPH memiliki 9 program S2 dan 2 program S3. Dengan pilihan program studi yang relevan dengan masa sekarang, siap memperlengkapi Anda untuk memenangkan kompetisi di dunia profesional saat ini. UPH Pasca Sarjana adalah pilihan yang paling tepat untuk Anda. Karena terletak di pusat kota Jakarta yang menjadi bagian dari kawasan segitiga emas. Tersedia kelas malam dan akhir pekan. Program studi berdurasi mulai dari 18 bulan dan selesai dalam 3 semester. Koneksi industri dan partner yang kuat. Networking di dunia profesional dan kesempatan yang luas. Multi-flexible learning. Dengan tenaga pengajar profesional dan praktisi yang ahli di bidangnya, kami fokus menjawab tantangan karir di masa depan secara praktis, serta memperlengkapi para pemimpin dan eksekutif secara holistik. Komitmen kami bukanlah sekedar menghasilkan lulusan saja, melainkan menjadikan Anda para pemimpin dan profesional untuk masa depan Indonesia yang mampu bersaing di era globalisasi. UPH, always the smarter choice.
Adisti Kinantibaga, panggilan saya Adisti. Saya berusia 22 tahun. Saya saat ini bekerja sebagai staff accounting di PT Prima Perkasa Global Indo. Saya mengambil kualifikasi ACCA pada saat saya berkuliah semester 5 untuk program Diploma in Accounting and Business. Menurut saya, sertifikat ACCA sangat membantu saya dalam mencari kerja setelah saya lulus. Karena saya sekali interview, besoknya saya diekspektasi masuk kerja, sedangkan kandidat lain harus tes berikutnya.
My name is Natalia Halim. My friends call me Natalia. I'm 22 years old. and I'm currently working as a finance graduate trainee in PT HM Sampurna Tbk. So right now I'm working in the group accounting department. More specifically, I'm working now in investors relation. So basically what we do is that we provide informations to investors and to analysts regarding our financial performance. I have an advanced diploma in accounting and business from ACCA, and now I'm pursuing my bachelor's degree from Oxford Brookes University. ACCA qualification has helped me learn a broad range of knowledge because in my role now, I'm expected to understand the financial numbers, but also at the same time relating it to the business situation right now. So these numbers have to tell a story regarding what's happening in the business. In 5 years, I would expect to have my bachelor's degree from Oxford Brookes University and at the same time continuing the P papers. And in terms of work, I would expect to be in a more senior position in the company that I'm working at.
Hi, my name is Risunandi Muhammad, but usually people call me Nandi. I am currently 28 years old and now working in BP or British Petroleum Indonesia as finance project advisor. Now I'm doing my ACCA studies in strategic professional papers. So I take ACCA qualification for at least 2 reasons. First is because it opened my career opportunities outside Indonesia, and then the second one is because it teach a more relevant curriculum for the new Industrial Revolution 4.0, which RPA, robotic process automation, and artificial intelligence will take many parts of our job. ACCA helps me progress through my career because now in my working place as multinational company, it is a requirement to have international certification to apply to a global vacant role. And now it's happened recently when I got promoted to be a finance advisor to Aberdeen and US. So it is because I put ACCA in my CV. My message for the ACCA young students are first is to always have a little extra for being an extraordinary. And for that, taking that little extra is by taking the ACCA to progress throughout your global careers. And then the second one is always to have a little extra to allocate your time every day. So by consistently allocating your time, it will be making us easier to pass ACCA examination.
My name is Alicia Ayonanda Swastika. People call me Alicia or Al. I am 21 years old and I have been an ACCA affiliate for a year now. I currently work at a pharmaceutical company that manufactures betadine products. It's called Mahakam Beta Pharma. In my role, I handle a lot of activities actually. So they deal with lots of material price analysis and monitoring discounts as well. And also I help a lot in efficiencies and improvements in the manufacturing side of the company. In 5 years, I see myself in a more senior position, ideally in a consulting or advisory role, and perhaps in a different country because I acknowledge that ACCA has global recognition, so I could definitely work in a different country. I choose consulting or advisory because I enjoy evaluating and analyzing business processes and their internal structure and trying to come up with ways on how to make them more efficient. I would very much enjoy helping companies by providing professional advice to help them become better in what they do.
Salam sejahtera. Assalamualaikum warahmatullahi wabarakatuh. A very good afternoon, the Chancellor of UPH, Dr. Jonathan L. Parapak, the Dean of Faculty Economy and Business, Dr. Anda Gracia Shinta S. Ugut, MBA PhD, the Head and Vice Program of One UPH, Lipo Village, Medan, and Surabaya, all other esteemed guests from One UPH, fellow colleagues from ACCA, including our market head, Ibu Hani Karunia, all students of One UPH, and all participants. Welcome to our event with the title of The Trending Critical Role of Non-Financial Disclosure in Financial Reporting. I'm Damis Nurcheni, and I will be your host today. Ladies and gentlemen, this webinar aims at shedding light and educate the audience upon current changes or trends in relation with reporting practices and non-financial disclosures, especially on special industries such as the extractive industry and the narrative sections of their annual reports. Before we start, please allow me to read few housekeeping rules. First, participants, please stay on mute throughout the session. And second, we will record the whole session for our internal purpose. And participants to use the chat box function for any questions, where moderator will raise the speakers during the Q&A session. And then participants to fill in the feedback form link that will be shared by the end of the session to get the e-certificate after the event. To open the event today, we will start with the opening prayer from Dr. Antonius Herusetia, ACCA CA. And for Dr. Antonius, the time is yours.
Good evening, ladies and gentlemen. I will lead a prayer and in bahasa ya. Selamat sore, mari kita bersatu dalam doa. Bapak dan Ibu yang lain bisa berdoa dalam keyakinan iman masing-masing. Bapa di sorga, kami mengucap syukur untuk sore hari ini, acara yang spesial yang Tuhan berikan buat kami, sehingga kami boleh belajar ya Tuhan. Perkara-perkara yang baik ya Tuhan mengenai akuntansi, bagaimana perkembangan mengenai akuntansi di masa-masa yang akan datang. Kami berdoa ya Tuhan, persiapan yang sudah dilakukan, kiranya semua dapat berjalan dengan lancar. Tuhan yang memberkati para fasilitator, para pembicara dari ACCA, Tuhan yang memberkati para dosen, para peserta semuanya ya Tuhan, termasuk juga di dalam jaringan internet ya Tuhan semuanya, agar dapat berjalan dengan lancar. Pimpin ya Tuhan dari awal, pertengahan hingga akhir, dan kiranya Engkau menyertai kami semua ya Tuhan, semua yang mendatangkan kebaikan, memberikan damai sejahtera, memberikan kebaikan dan pengetahuan, tambahan pengetahuan bagi kami semua ya Tuhan, khususnya buat para mahasiswa dan para praktisi di sore hari ini. Terima kasih Bapak, kami naikkan doa kami dan mengalaskan doa kami hanya di dalam nama Tuhan Yesus. Amin. Thank you.
Terima kasih Bapak Anton. And now we will have the opening speech from one UPH Rector, Bapak Dr. Jonathan L. Parapak, Master of Engineering Science. To Bapak Parapak, the time is yours.
Good afternoon, ladies and gentlemen. It is my pleasure to welcome everyone to this web seminar, something that's very important, particularly for our accounting department at the Universitas Pelita Harapan. I invite everyone to thank God for this opportunity and ask, as Anton has already prayed, that this seminar will be blessed and will be very useful for our students and also for the professionals. Allow me to thank the ACCA for collaborating with UPH, because part of what we like to see is the collaboration as wide as possible. And I think with this collaboration will enable our students and those people or everyone who is participating in this seminar, will gain extra network and hopefully will get benefit from the seminar. So ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera untuk kita semua. Saya mengucap syukur bahwa ya kita boleh berjumpa melalui Zoom Network dalam satu seminar yang sangat penting ini. Saya percaya bahwa ya tema yang diangkat ini adalah tema yang sangat penting, di mana memang lagi berbicara ya tentang ya masalah yang akan dihadapi pada accounting untuk masa depan, yang pasti sangat dipengaruhi oleh teknologi. Kita melihat ke depan, dan kita akan melihat satu dunia baru. Bahkan we are in the process of going there. Ya dengan pandemi ya COVID-19 ini, kita sesungguhnya dipersiapkan untuk memasuki dunia baru, the new normal. Dan seluruh ya program studi, bahan ajaran di universitas mengalami perubahan-perubahan. You know, until last year, I thought UPH was only going to do online education about 70%. But overnight, we have to apply 100% online learning. Ini adalah perubahan-perubahan yang luar biasa. Dan kalau kita melihat ke depan, tidak saja sesungguhnya ya ekonomi yang sangat berubah, terjadi transformasi, teknologi bertransformasi, dan juga seluruh proses-proses termasuk accounting. Saya kira tadi juga sudah disampaikan dalam film yang ditunjukkan, bahwa ke depan all the routine works will be taken over ya by the computer. Sehingga kita bertanya, what will be the role of an accountant in the future? Dan saya pikir dengan web seminar ini akan mengantarkan kita berpikir untuk masa depan. Para pengamat mengatakan, ya masa depan itu kita memerlukan orang-orang yang apa? Yang critical thinking, yang inovatif, ya yang mampu berkomunikasi dengan luas, global communication, dan apalagi juga harus berkolaborasi seluas-luasnya. Tentunya akan menghadapi berbagai tantangan-tantangan. Ya kalau ya bagian dari tema yang diangkat ini, yang terkait dengan disclosure itu adalah non-financial disclosure. Ya kalau sekarang para accountant mempersiapkan atau mengadakan audit, ya pasti you can say, okay, what are the supporting documents, supporting material? You can show it very easily. But in the future, everything will be from the big data. And this is a real challenge, I think, will be faced by everyone in the future. Anyway, I really appreciate the cooperation between the accounting department of UPH and ACCA, because I think UPH must always be working to collaborate, not only nationally but globally, so that UPH will be ready to prepare the professionals for the future. And I think what is being done through this collaboration in the seminar, it's an example, it's a model of what should be done a lot more in the future. Also, I think, as the ministers declare, about Merdeka Belajar. Merdeka Belajar, is emphasizing that, you have to really spend more time in the real world. Jadi harus 2 semester barangkali di dunia nyata. You have to be really, be aware of what's going on, in the real world. And then I think the Merdeka Belajar is very much in line also with what is being addressed through this seminar. So allow me to again thank all the panitia, thank all the ACCA supporters, executives, and also our UPH members. And I pray that this seminar will be blessed by our Lord and certainly will encourage us, will really help us to face the future and say that, yes, we understand what's going to happen and we are ready for it. So thank you, to the speakers, thank you to everyone, and may the Lord bless this seminar. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you very much, Bapak Jonathan L. Parapak, for the inspiring opening speech. And now, last but not least, in the opening section, we will hear on recorded video all the way from UK, the opening speech from Mr. Mark Millar, ACCA President. To the committee, please play the video. Thank you.
Good evening, everyone, and thank you so much for inviting me to share some time and a few words with you at the start of this wonderful event. I would also like to send my warmest greetings to our special guests, the Rector of UPH, Dr. Honorary Jonathan L. Parapak, the Dean of Faculty of Economics and Business at UPH, Ibu Garcia Shinta S. Ugud, PhD, and Head of Accounting Program at UPH, Ibu Wijaya Triwashaning Room, MA. Sorry if I didn't get the pronunciations quite right, but thank you so much for joining us today. First, I must congratulate our friends and colleagues for staging such an important discussion. And I thank you all for making the time to engage in this critical debate. The theme, the critical role of non-financial disclosure, is vital, even though to people outside of our profession, it might sound a little hard to understand. But really, we can simplify it and say that it is all about fairness. Fairness in business, fairness in the world, fairness in life. And fairness is a concept that everyone understands. Non-financial disclosure is about fairness because it's about making sure that everyone has equal access to the business information that they need. It means that everyone with a stake in corporate decisions which affect their life or livelihood, investors, consumers, workers, regulators, the general public, can see a full picture of a business's performance, including the whole array of non-financial data, such as its impact on the environment, its contribution to society, and its commitment to long-term sustainability. The only true foundation for wise decisions on the ethical and sustainable allocation of capital is honest, total, and transparent non-financial disclosure. And this is something that ACCA has always believed in. Let's remember that ACCA was founded in the first decade of the 20th century, precisely to promote fairness in the profession and open up the chance for a rewarding and useful career to people from all walks of life. And we believe in these values because they are right and they are just. But we also believe that they are also very good for business. In our world now, customers and investors are more concerned than ever about the global impact of the businesses that they support. They demand to know much more than the contents of a profit and loss account. They want and need to know that any business they trade with has a long-term commitment to sustainability. So the challenge for businesses everywhere is to be able to meet these demands. Now, I know that this has been the case in Indonesia, where the law has tried to ensure that businesses are honest, open, and comprehensive in their reporting. We also know that not every business has managed to keep to the spirit or the letter of these laws. Some businesses have still cut corners on reporting to maximise short-term profit at the expense of long-term sustainability. But I believe that we are beginning to see businesses being punished in the marketplace for failures to meet the challenge of non-financial disclosure. By any contrast, businesses which are dedicated to non-financial disclosure are rewarded. Transparency breeds trust. Investors are more likely to choose businesses which they believe in, and customers are more likely to spend their money with them. To sum up, my view on what non-financial disclosure means for businesses in Indonesia and everywhere else is simple. It's all about how we choose to keep score in business. It means insisting on financial reporting rules which extend far beyond the narrow bounds of profit and loss. It means insisting on rules which measure a business's impact on society and the health of the planet just as precisely and just as forensically as it counts the numbers in the cash column. It also means fixing those rules by law, making them mandatory for all businesses, all organisations, everywhere. Now that might sound a bit drastic, but I believe that it is necessary. So let me describe precisely why our individual contribution as finance professionals matters so much in this area. It matters because accountants are perfectly placed, uniquely placed I should say, and perfectly prepared to bring the right blend of professional skills and attributes and the right store of knowledge and ethical values to serve as guardians of the public good in every place where we work and live. No other profession can exert so much influence on the future direction of business. No other profession is in such a strategically sensitive position to highlight the importance of rigorous non-financial disclosure and to act as champions for sustainability. This is a challenge facing us all, tonight and into the future, to set out clearly and precisely, in language that everyone can understand, exactly how we can help with business change, with sustainability at its heart, and to place our expertise, our skill, and our dedication to the good of society and at the service of the world. Thank you again so much for listening to me and inviting me, and please have a really good night. Thank you very much.
Apologize that I forgot to unmute my. Before we come to the main agenda of today's session, Ibu Hani, ACCA Market Head of Indonesia, will share with you some details about ACCA in a short summary. And for Bu Hani, the time is yours.
Yeah. Thank you, Ms. Damis. So good afternoon. Salam sejahtera. Assalamualaikum warahmatullahi wabarakatuh. I guess since we are given a very short time for the brief presentation about ACCA, but before that, I still would like to say thank you again to the team that made this event happen, including Ibu Ugut, the UPH Dean, and that will be our moderator today, and Pak Parapak, the Chancellor, Bu Wijaya, and the team, also our BRM, Ms. Damis. And of course, all of our audience, so we appreciate your presence, and special appreciation also to our amazing speakers today, Pak Aditya Fadriansyah, ACCA, that's the Deputy Manager of ConocoPhillips, and also happens to be our ACCA member, and Ibu Lani Haryanti, the Regional Program Manager ASEAN at Global Reporting Initiative, or GRI, and also Mr. Brad Denick, the MD of the Sustainability Practice at AWR Lloyd. So ACCA is the world's most forward-thinking accountancy body that we've been established since 1904. So you can imagine we're actually pretty old. Yeah, we've been around for 116 years old. We believe that accountancy is vital for economies to grow and prosper. We work all over the world to build the profession and make society fairer and more transparent. As you can see in the slides that's given or shown to you, we have quite large of members and future members. And also in Indonesia itself, we have the largest database for the students. And from the video earlier, you can see that they work in every sector you can imagine. We have global partnerships. This network also gives us unrivaled insight into where the accountancy profession is today and what the future holds. Yeah. Okay. Next slides, please. So as you can see in this slide, technology is a fast-changing area. These slides show that when you study ACCA, you'll get an exposure of the many digital content such as fintech in accountancy and audit. And there's also data protection and security, information technologies, and system of organizational performance. Even some of more trending topics are knowledge these days that's been around the cryptocurrencies, blockchain, and also the initial coin offerings, and so many others. These are the digital content that has been successfully embedded in current ACCA modules. Okay, next slides, please. Yeah, in these slides, you can actually see this is our professional qualification programs or the modules. We divided to fundamental level, and there's also until a strategic professional level. For fundamental, there are applied knowledge and applied skills with a total of 9 exams. As you can see, it starts with 3 modules in applied knowledge, and then after that, it's the 6 modules on applied skills stage. And then after that, there is this SP or strategic professional level. Now, while in the strategic professional level, you will need to do 2 essential papers, SBL and also SBR, yeah, strategic business leaders and strategic business reporting. Then another 2 exams from options paper. So that's total of 4. So if we can actually add on the whole together, there will be 13 exams. You'll also be required to do ethics and professional skills module. So that's, we call it APSM, and also submit 36 months of relevant working experience or 3 years. And then you will be ACCA qualified. Beside professional qualification, ACCA also offered a pathway to get an academic degree in Bachelor of Science in Applied Accounting from Oxford Brookes University. And also we have another pathway, after you've done the ACCA program, you can take the MSc in Professional Accountancy from University of London, UOL. And the great news is UPH is already in the middle of preparing the document for accreditation application. Soon, you will get shorter journey to become ACCA member. So we're looking forward to that day, yeah, for all of us. Now, next slide, please. So in this particular slides, you can also see our career portal. This is a global career portal, been around for 22 years. It's deemed as the largest finance and accountancy career portal. One of the way it is in this portal is creating also an opportunity for our students, affiliates, and members to get connected with the employers, but also this is actually open for public as well. But you can also probably, seek through all of those vacancies if you are curious what are they. But yeah, some of them also does require professional qualification as ACCA, but also some quite open for others, including some internship as well. There are a CV upload feature, so you'll be notified and also noticed by the employer partners of ACCA. So you may check directly to the website. It's the portal link is jobs.acccaglobal.com to get further information on what is happening in the industry and what is required, so you can prepare accordingly. Okay, I think we are getting to the end of the presentation. Thank you so much for your time. And back to you, Ms. Damis Nurjani. Thank you.
Thank you, Bu Hani, for the presentation, and to the audience on all of your attention towards ACCA. And now, before we jump to the main event, I would like to remind you to please stay until the end of the session, as there will be a feedback form link for you to fill in for you to get the e-certificate. And now, we have come to the main session. And before I invite our moderator, Dr. Anda Gracia Shinta S. Ugut, MBA, PhD, the Dean of Faculty Economy and Business, please allow me to read her short bio first. Dr. Gracia Ugut has extensive experience in managing higher education institutions and international partnerships with strong academic background as faculty member and business developer in academic settings. She was the Dean Executive Education at the ASEAN Institute of Management in Manila, the Philippines, from 2001 until 2013. She is also a certified trainer from consultative group to assist the poorest CJAP World Bank for microfinance in Asia. She was serving as a senior advisor to the board of PART MRI in the Philippines from 2005 until 2012 and head of panel of jury Arabia CSR Forum Award in Dubai from 2008 until 2016. Since returning to Jakarta in 2014, she has been working as the Dean of Universitas Pelita Harapan Business School. She served as a council member of Global Education Council at the World Economic Forum between 2015 until 2017. She was heading the Permanent Committee for Vocational Education at Indonesia Chamber of Commerce for period 2015 to 2020. Trained as financial economist, Dr. Ugut also has an interest in exploring ideas at the intersection between modern finance and sustainability issues. To follow her interests, she has written a book on impact investing in ASEAN, aside from other books on fixed income strategy and market in emerging markets and capital markets. Dr. Ugut earned her PhD in financial economics with Latin honor from Vienna University of Economics in 1995 under the North-South Dialogue Program, scholarship program from the European Union. Very impressive bio, Ibu. So for Ibu Ugut, the session is yours to lead.
Yeah, thank you so much for the very generous introductions. Good afternoon to everyone. Salam sejahtera bagi kita semua. Assalamualaikum warahmatullahi wabarakatuh. Om Swastiastu, Namo Buddhaya, salam kebajikan. At these occasions, I believe that we have been waiting for listening to all the presentations of three distinguished speakers who had been actually introduced earlier by Ibu Hani Karunia, the head of ACCA in Indonesia. So thank you also for Ibu Hani Karunia that already giving introductions about the ACCA program, particularly that related to the collaborations that being done for the university and also with some kind of really pathway of programs for link up with some of the university in United Kingdom. So this afternoon, despite of the, perhaps you hear the sounds at the background, you know, the thunder and the hails, okay? So hopefully that this will not put a stop to our discussions for this afternoon. And we will actually introduce three speakers that we have. And this will provide actually a very good exposure to understand that where are they coming in from, and when they are sharing this with us, that is also that kind of perspective that they will bring in to basically to the discussions. So we do have three speakers that I will read by name based on the alphabetical order name of the first name. So the first one is Bapak Aditya Fadriansyah. So Pak Aditya is Deputy Manager Gas Commercial at ConocoPhillips. So everybody knows what is ConocoPhillips. That is one of the largest oil E&P companies in the world. And the second speaker, if you look into the background, of course, Pa Aditya, also an ACCA member. And then the second speaker is Mr. Brad Denick, who's the Managing Director of the Sustainability Practices at AWR Lloyd. I believe Mr. Denick is based in the United States, or is it in Lloyd in UK? So we will find out later on when we have opportunity to listen to Mr. Denick. And then last but not least, Ibu Lani Haryanti, who is the Regional Program Manager, ASEAN, at the Global Reporting Initiative, or GRI, that based in the Netherlands. So we do have these three speakers that are representing different companies, different perspective, different part of the world, but with the unifying intentions of talking about what will be the critical role played by the non-financial disclosure to the financial reporting. We've been listening earlier from Mr. Mac Miller as the ACCA president, that he mentioned many important words: fairness, access to the information, and impact. So these are all the things that we want to hear, that how this will be implemented or it will be expanded in the practice of the companies with the global scale. So I would like now to call on, based on this alphabetical order once again, first is Mr. Aditya Fadriansyah. So for this, what is that? Okay, so we will have basically giving the speakers about how many minutes is that, Ibu Dames?
About 15 minutes, Ibu. 10 to 15 minutes to share.
Yeah, okay, and after that is going to be a Q&A at the end, not every session, right? That will be...
Yes, at the end there will be a Q&A session.
That's right,
Ibu.
okay. All right, so thank you so much. Let's start with Pak Aditya. Pak Aditya, the floor is yours.
Hello, Assalamualaikum warahmatullahi wabarakatuh. Good afternoon, everyone. Salam sejahtera untuk kita semua. First of all, I would like to say thank you to Pak Jonathan, Ibu Ugut, as well as Ibu Hani and Mbak Dames, as well as all the others committee that has invited me to this event. It's an honor for me to be able to share in this afternoon. As has been informed previously, I'm sharing my screen. I just would like to ensure that everyone sees my screen now. I'm Aditya Fadriansyah.
Yep, now we can see my.
Yeah.
But need to enlarge a bit.
Okay.
Yep.
I have enlarged it. Okay. Wait, I think it's moving from my screen. Okay. I've completed the ACCA in December 2020 and has obtained the membership in January 2021. I believe my screens haven't.
Yeah, just screen. Yeah.
Okay. I would like to ask you first, for everyone, what can you find in financial statements, or have you ever seen financial statements in real life? I mean, you may have tasks or assignment from the university or from your study, but have you ever read and what can you actually find in financial statements? Apart from numbers, Mark Miller has already stated that the main important things is information. And today I would like to highlight the importance of the non-financial disclosures and the information that we can find in them. So this is an example of information that we can actually find in financial statements. Companies usually have an annual or at least quarterly financial statements. These are the statements that are taken from Netflix and Walt Disney. Apart from numbers, you can actually have information. The recent situation enforce us to work from home and study from home, and that's actually caused the subscription for Netflix and also Disney Hotstar to increase. From their reports, you can know the release schedule of maybe your favorite movies. So financial statements or statements from company are not only about numbers, but it's also about the information. And that's what we're going to highlight for today. And these are the recommended reading. My presentation will focus on the first two tables, the ones on the left and the middle ones. Those two are taken from the two professional insights. It's a product of ACCA and Adam Smith Business School research report. I recommend you to visit www.acccaglobal.com. You can find a lot of interesting reading materials there, such as the reporting race, the global economic survey. It's published quarterly, as well as the sustainable development goals, to keep you in touch and follow the recent trends. One of the articles that is worth to mention, in 19 May, they actually published a new insight. It's called Gen Z and the Future of Accountancy. And that report, 91% expect to update their capabilities continually to remain employable in the future. So what that means, that after you finish, you need to keep upgrading yourself, as has been explained previously in the ACCA video. So a bit summary of the first article, the capitalization of intangibles debate. We're going to be a bit dive into deeper on the focus on the exploration and evaluation expenditure, the E&E in the extractive industry, and concentrate on the accounting policies used for the treatment of these expenditures, to provide a holistic view of the amount and the complexities in the financial statements. The second part of my presentation is on the articles titled Climate Change Risk-Related Disclosures in Extractive Industries. The research divided the section into two parts, the front end of annual report and the back end of annual report. The front end is the narrative, the statements from the CEO, while the back end is the numbers as well as the notes of the financial statements. Hopefully, by going through these two articles can give you more insights on what are the non-financial disclosures is about, and what's the usage those to the users of the financial statements. First, let's jump to our first topic of today, the extractive industries, the intangible assets. Before we start to the content, I would like to emphasize that the extractive industry has a specific and very high risk, high return nature of the business. So it requires a specific treatment of the expenditures that it incurs. First of all, the paper research is about the research conducted in 8 countries. It took around 1,096 samples or companies from their annual reports, and it's divided into several stages of the report. And there are some regression analysis conducted in the reports. And the first part, I would like to highlight the accounting policies that is being used on the capitalization of the E&E expenditure. Well, the E&E expenditure is actually a cost that you spend ahead in advance to find the resources. You may or you may not found it, because in extractive industries, it's actually the chances of success is almost around relatively low, 10 to 20%. From the left, you can see the more conservative policies is to expense all. It means that you recognize it as expense as it is incurred. And the more aggressive is to capitalize all of them at full cost. In the table, you can see the population of the users of the financial statements in those reports. Most of them uses the successful efforts policies, while only 3% use the full cost policy. The accounting policy choice is obviously driven by the country in which a company is listed. The oil and gas firms tends to use successful efforts, while mining firms are more heterogeneous, means that they use a different kind of approach. The area of interest is very specific to Australian companies. So again, because it's driven by the country in which a company is listed, then it's mainly for the Australian companies. The second part is the capitalization. There is actually 75% of the companies in the research capitalize some E&E costs. So it's highlight the importance of this line item in the financial statements. The research also divided the companies into 3 parts: the junior explorers, developers, and producers. And they studies the different relationship or behaviors on those. They are divided those based on the revenues. The research found that the companies accumulate significant amounts of E&E capitalized on their balance sheet. it's more acute, which is more significantly found in smaller firms, which are significantly more intensive in E&E expenditure. And when it becomes larger and when it becomes more profitable, it capitalizes less proportionately. And the next section is after you capitalize those or you record those as an asset in the balance sheet, you need to at least do some impairment testings, or you need to reevaluate the value of those assets in the balance sheet. One third of the report impairments of the E&E intangible assets, so it's quite frequent. The magnitude relative to the non-current assets at the end of the previous year decreases as revenue increases. So when the company gets bigger, the impairment becomes less. While the magnitude of the impairment recognized is larger for smaller firms, the impairment recognition for E&E assets is not necessarily more frequent in smaller firms. That's what the research found about the impairments. In conclusion, for this research, the basic model is working. It's commonly used, and it's to capitalize in early stage and then be ready to impair when needed and to do some evaluation. However, the research noted that the standard could be more specific in outlining and defining alternative methods from which companies could use aside from where they're based or what country they belong. The full cost may not be among the methods because the population is very small, and also it's too aggressive if you capitalize all of them at the same time. The IFRS 6 lacks mandatory disclosure requirements. The IFRS 6 is specific for the exploration for and evaluation of mineral resources, and comparability is hindered by the lack of transparency. Well, actually, the research also found that the companies capitalize significant amount of E&E assets in the IFRS 6 based on that versus internally generated intangible asset based on the International Accounting Standard 38 for the intangibles assets. So there are potential lack of internal consistency there between the IFRS 6 and the IAS 38. The IFRS 6 is very specific for the extractive industries, while the IAS 38 is more general for the intangible assets for the common industries. And we continue to the next part, the second report from ACCA, the climate change risk in extractive industries. It divided two sections for the annual statements. The report actually analyzes 2019 annual report of 60 publicly listed companies in the extractive industries and divided it into two parts. The front half, the narrative sections, such as the chairman's and CEO's statement, the strategic report, it provides more disclosures and climate-related KPIs, describe their business model there. 26 follow the TCFD. TCFD here stands for the Task Force on Climate-Related Financial Disclosures. It's a good thing to note, but however, only 60% report quantified reserves in terms of the quantification, but very few discuss impact of climate risk. So this is a concern that is raised during the research. In terms of the scenario analysis, 25% mentioned about the climate risk, but only 10% do a quantitative analysis on the impact. And only 60% identify climate change in the business model, and 26 companies link climate targets and management incentives. In terms of the financial statement impacts, you can see the numbers here. It got a little bit smaller and concerning here. You can see the population. It's all of them is less than 50% noted the issues for the climate-related risk as a factors, and that is affecting their components of the financial statements. And this is what the research has found, that even though the conclusion there in the front end in the companies acknowledge to some extent the impact of climate change risk, however, on the back end, the information provided and the considerations rarely have depth and far from complete. But the research shown that there's some encouraging development during 2020, which is this taken from the 2019 annual report, could influence future reporting and could affect the integration of climate change into the report. So in conclusion, the first and the second table shows the summary of what have been discussing earlier. The first on the capitalization of intangibles assets, and the second section about the climate change risk related disclosures. in extractive industries, both highlights the importance of the non-financial disclosure. As Mark Miller mentioned earlier in the beginning, it's all about fairness, equal access to information to give a full pictures that may impact to stakeholders' decision making. Investors everywhere are smarter now, growing more demanding, curious, and discerning about information. They are thirsty for additional information, and the non-financial disclosure actually needed to provide context or driver of the business, because numbers alone cannot tell you the full story of the business. I think that's all my presentation for today. I'll welcome your questions and comments at the end of the session. Thank you very much, and give it back to Ibu Ubud. Thank you very much.
Thank you so much, Pak Aditya, for the presentations, and it set the tone, I think, for framing the issue that we have this afternoon. A lot of things that, the issue of quantifications and, come up with a very clear target like any other KPI of the business, which is actually the biggest challenge that faced by many companies that will be embarking into this kind of what we call non-financial disclosure. We will wait for the questions later on for you. Let's just move on to the second speaker. I would like to invite Mr. Brad Denick, Managing Director of the Sustainability Practice at EWR Lloyd. Mr. Denick, please.
Hi, thank you so much. Nice to be with you all. Just one moment, please, while I presentation. Okay, can you see okay?
Yes, it's fine. It's completely fine, yeah.
Okay, so again, thank you for having me, and look forward to speaking with you. So our presentation will be on how does non-financial ESG data inform corporate strategy in the mining industry, with a focus on climate data. Briefly, who we are, AWR Lloyd is a strategy consulting firm that also does mergers and acquisitions. So it's 21-year history. It's in Asia Pacific. Myself, I'm based in Bangkok, Thailand, and I've done a number of assignments with companies in the region over the 21-year history of AWR Lloyd. Services, again, are strategy, project advisory, M&A, and corporate finance strategy. Recently ranked as one of the top 10 consulting firms in the region, focused on diversity, which is one of the core strengths. Our offices are in Jakarta, Ho Chi Minh City, Bangkok, and Mumbai. Last bit here on the company overview. Part of the reason speaking with you today is that our firm is very focused on sustainability, and that quote to the right is a driving part of our mission, and our view that a key driver of corporate value over the next 2 decades will be innovation for sustainability, as expectations rise for corporate solutions to climate change and sustainable development. So as a strategy consulting firm, we utilize the metrics and non-financial data to help companies make strategic decisions. So when we look at sustainability data, I'd say zooming out, and obviously we'll have an opportunity to hear from GRI directly in just a few moments. But that sets the standard. That's the foundation really for how to account and what to account for. Then I'd say we have options then to kind of narrow down our focus into data that's relevant by sector. GRI also does that, but SASB is an interesting group for us. That's the Sustainability Accounting Standards Board that really focuses on financial materiality of ESG issues at a sector and industry level. And then, as the previous speaker had mentioned, TCFD, Task Force on Climate-Related Financial Disclosure. Now we're looking more industries, or rather issue-specific, in guidance on how to report that information. And then, of course, there's industry-specific groups such as ICMM that will provide insight as far as how ESG sustainability issues should be managed. Real quickly on SASB, this is that materiality map that was just referencing. And on the left here is the dimensions, environment, social capital, human capital. Where we as a firm typically focus is business model and innovation. And then here are all the different categories that could be material to the extractives and mineral processing sector, and maybe material to more than 50% of the companies within the industry. So in coal operations, for example, dark red means it's material to more than 50% of the companies in that industry. So this is just a map, but of course you can kind of click in to each one of these, and then you'll see guidance available for industries within the sector. So for coal operations, it's very helpful guidance, right, in terms of financial materiality. Out of all these issues within ESG, what are the most important, right? And out of these 8, we just focused on one that we think is quite interesting for this discussion, which is reserves, valuation, and capital expenditures. So helping a company know why they should be reporting and how they should be reporting the sensitivity of their coal reserves to a price on carbon emissions. What's the estimated carbon dioxide emissions embedded in their reserves, proven and probable reserves, and discussion on how carbon prices and really market risk from a TCFD point of view, how that might impact the company's CapEx strategy. So very, very helpful. Now, we're going to transition a bit in this talk to think about 3 companies, all within the mining sector, and looking at climate data, right? So the first company is a coal-centric company. Second is one that's transitioning, and the third is maybe the cleanest out of the group. And these are approximations, but these are real companies. We focused on companies that have a presence in APAC, but all of these are quite broadly global. Company 1 again is focused on coal. Company 2 is coal, copper, zinc. And 3 is aluminum, copper, and iron. And so the profile production-wise will be different, and their carbon intensity will be different. The carbon emissions for Company 1, Scope 1 and 2 combined, we'll get into that in a moment, is 3.6 million tons of CO2 equivalent. The Scope 3 emissions, which is everything upstream and downstream of what a company owns and operates, more or less, that is 66 million tons of CO2. For the company number 2 that's transitioning, 16 million tons of CO2e, Scope 1 and 2, and over 550 million tons of Scope 3 emissions. And same kind of metrics for Company 3. Important to note here is Scope 3 emissions are 15 to 35 times greater than combined Scope 1 and 2 emissions. We'll get into the importance of that in a moment. So if you're looking at the mining industry, what are sources of carbon emissions for them? So we have our greenhouse gases up here. We have Scope 1 emissions, which are really owned and operated, right? So a source for mining industry would be mobile combustion. So diesel fuel tends to be a driver of Scope 1 emissions. You have methane, so flaring emissions, flaring or fugitive emissions, processing emissions, everything that happens within what they own. And then Scope 2 is all the electricity purchased from the grid. It could be for their office utilities in the city. It could be for logistics and warehouses. It could be for camps if it's a large mine that's connected to the grid. So those are the core Scope 1 and 2 emissions. And so you want to then start thinking about what metrics are insightful for understanding the carbon risk in this company. So you start with what's the total tons of Scope 1, 2, and 3. And Company 1 is coal, transitioning in the cleanest. And these are the total Scope 1 emissions. And then you would say, well, what are the Scope 1 emissions per ton of production? And so this one is the greatest, 0.03, 0.07. And then for every ton of CO2 that's emitted, what's the equivalent US dollar of sales? So for this particular company, it's less than $700. For Company 2, it's $4,500, et cetera. None of these are too insightful, frankly, because you can't compare them too easily because of the nature of what they're selling, right? It can be helpful for a company to say that it wants to go from 0.09 to 0.03 over 5 years and be more efficient within its emissions here. But again, to compare against companies, it's maybe not so insightful. So what is really from our perspective, becomes very insightful and strategic is what's the full picture of carbon emissions. And there you have to focus on Scope 3. Because again, it's 15 to 35 times greater than Scope 1 and 2, what we just looked at. And within Scope 3, almost 99% of the emissions are right here. Right? So if you're a coal company and you sell coal to a utility that burns it, it's going to be your use of sold products. Right? or if you're selling different commodities that have to be processed, then there's going to be significant processing emissions here. So now you can see those same companies, their tons of CO2 by scope 3, and now you compare them by what's their ton of carbon per ton of production of scope 3 emissions, and not too different there. But then you start looking at what are their sales, right? So every ton of CO2 that's produced, what's the equivalent sales revenue? So company 1 is only generating $35 of revenue per ton of scope 3 carbon emissions, whereas company 3 is generating $91 of sales. So the other metrics we looked at were kind of helpful, but if you start looking at which company is better positioned in a market and in an economy that wants to decarbonize very rapidly, you start to see that company 3 is quite well positioned, as is company 2. When you look at that now in terms of metrics around revenue and EBITDA, you'll see that company 1, again, it generates 1 ton of scope 3 CO2 emissions for every $35 in sales. Company 3, 91. For company 2 and 3, they are generating, for every 1 ton of scope 3 emissions, it's equivalent to $41 and $43 of EBITDA, respectively. Whereas it's only $6 for the coal-centric company. You start to look at this in terms of long-term strategically, which companies are going to be better positioned. You don't get that information so much from scope 1 and 2, but you do from scope 3. So going forward, non-financial information, especially around climate, what kind of metrics, what kind of data should you look at? Production-based tons of CO2e per ton of production. It's helpful for a company for its own targets, but it's very difficult to compare amongst mining companies given the production, what they're producing is so different. Reserves-based is tons of CO2e per ton of proven and probable reserves. Very helpful in terms of assessing stranded asset risk. Its con is that it's only forward-looking. It won't tell you how a company is managing its carbon risk in its operations today. In the future, this is likely to be the most common metric, will be copper equivalent tons of CO2e per ton of copper equivalent. So this particular metric, it's well understood. So copper equivalent is well understood in the mining industry and accepted, and it allows for better comparison across companies. Its issue is that it hasn't been adopted yet, so it's a lot of work for the analysts to come up with that figure. The last thing to highlight here is CapEx linked. So ton of CO2 per $1 million spent, per dollar spent. The positive there is that's a leading indicator. So even if a company has a mixed story today, if they've made a decision to decarbonize and they want to avoid stranded asset risk, that investment that they're making today, what's the carbon intensity of those investments today that will be leading towards emissions in the future? The only issue there is that mass performances may be better tracked by production intensity targets. Just a couple more here, and then my time is up. So what does that mean strategically? We tend to focus, yes, you can, as a mining company that wants to operate well, you reduce your scope 1 and 2 emissions because you can control that. Scope 3 is your market. It's your downstream emissions. But it's very important to understand what's the carbon intensity on a life cycle basis of your different products you're producing. So thermal coal has the highest. Iron ore and met coal are also quite high. There's a lot of processing emissions. The average of where we need to be, according to Transition Pathways Initiative, is roughly around 50 tons of CO2 per copper equivalent. And then some of the more clean tech mine metals that we'll get into in a moment, those tend to be closer to this kind of intensity. So this is where the market is going. And so strategically, we would use this to reinforce the guidance to move into clean tech metals. Last slide. So what are the strategic implications? It's drastic and direct reductions in the scope 3. They call for a transition to clean tech metals. These are some of the metals that are going to see a major shift. They already are in demand as we decarbonize, and the different technologies that need these metals. And over here on the right, you see on the gray is coal, right? So the overall demand for coal decreasing over the next few decades, whereas the demand for copper, the demand for lithium, nickel, cobalt, graphite all really beginning to increase in significant ways. And for Indonesia, obviously, there's very important ramifications for nickel. So anyhow, that's all that I have, but gives you a sense of how a strategy firm that's focused on sustainability will be looking at this data to help clients see their opportunities in a slightly different way. Thank you.
Thank you, Brett. It's very interesting with all the approach and the consequences of choices, particularly in the transitioning era between the old days into really clean technology. It comes with a cost and a lot of complications, which I believe that many of the participants also perhaps will ask whether all the responsibility will be only on the industry or the companies, but also what happened to the other support institutions like the financing institution, and also perhaps the market reform that, as you know, that different country in ASEAN where you are operating have a different level of the regulations on certain sectors, including mining and power, for example, that also I believe will play a very important role into the whole discussion about this. Thank you. So let us move now to Ibu Lani Haryanti, who's the Regional Program Managers ASEAN at Global Reporting Initiative. So for many of you that perhaps, for the first time listening to the GRI is the organizations that actually rolling out on many of these reporting initiatives for this many things, impact assessment, CSR, or sustainability. So let us give the time and floor to Ibu Lani for sharing her thought on this. Ibu Lani, please.
Thank you, Ibu Gracia. So thank you, everyone. Thank you for inviting me for this session. So let me share a little bit about GRI in 15 minutes. The GRI standard itself, it's about 500 pages, but we will breeze through it in 15 minutes, and you are not going to open the GRI standard at this point. So let me start. So the title is about non-financial disclosure, and as Ibu Gracia said, GRI is the standard for sustainability reporting. So if you want to start with non-financial disclosures, I would suggest that you will start with learning about the GRI standards. So GRI is an independent international organization. We were created in 1997 because of the Exxon Valdez case. We were created by the UN, United Nations Environment Programs, in collaboration with CERES. And they thought at the time it would be good to have a global common language for corporate transparency. So our goal is to help business and other organizations to understand and communicate their sustainability impacts. Therefore, we deliver the GRI standard, the world's most widely adopted sustainability reporting framework, which is freely provided as a public good. And we have translated into Bahasa Indonesia too. So right now, the GRI standard has 12 translations, including in Chinese. I forgot. I think there is two translation in Chinese. GRI operate through a robust multi-stakeholder approach. So the standard didn't come from the desk of our CEO, but we have an independent global sustainability standard board, which consists of multi-stakeholder. It's not only business representative, but we also have the scientists, the researcher, the civil society, the activists sitting there. So the standard, if you see into it, it's sort of balanced. So it's not too, let's just say, environmental activist tone, but it also not too business tone. So it's sort of in the middle. So this is the GRI standard. If you look, if you want to know about the GRI standard, we have structured the GRI standard into the universal standards, which we code as GRI 101 as the foundation, and then the general disclosures. It explains about how your company, the profile of the company, and how you govern the systems in managing sustainability. And then we have the management approach attached to each specific disclosure. So with 24 years, Basically, right now we are referred by 73% of largest 250 companies in the world, as can be seen in the KPMG survey. So KPMG did a survey on sustainability reporting trend in the last 20 years. So GRI remains on the top most referred sustainability reporting standard. By now, we are also referred in more than 168 policy in 67 countries, usually used by the Financial Service Authority or the stock exchange, some also the local government. Do you know that the download of GRI standards in the last years, we grow about 41% compared to the previous year? In Indonesia, the download itself, right now we reach about 12,000 download from Indonesia in the last 3 years, consistently above 10,000. So I would suggest that when you want to learn about sustainability reporting, about ESG disclosures, do download the GRI standard and start reading about it. So I will start my presentations. In 2013, Peter Baker, when he was appointed as the CEO of the World Business Council of Sustainable Development, he thought that accountants can save the world. So how do accountants can save the world? So let's take a look first at sustainability. Sustainability is something that I learned when I joined GRI. So I'm not an expert like Brad. So I learned about sustainability the first time since 2018. So when I learn about sustainability, of course, I would like to know what is this so-called sustainability. Why do company needs to learn about sustainability reporting, and what's in it for them? And then the first I look at is there the top sustainable company in the world? Apparently there are. So the Global 100 Corporate Knights, they issued the top 100 list of most sustainable corporations in the world. And this year it's held by Schneider Electric. And surprisingly, I forgot whether this year or last year, an oil and gas company is actually on number 2. The way they changed the programs or their business portfolio into more sustainable, it was amazing to have an oil and gas company, which is right now tagged as an energy company, as number 2 in the top 100 list of most sustainable corporations. So when you look at the top 100 most sustainable corporations, so this is from the web page of this Global 100. Sustainability is about having a clean revenue, waste productivity, clean investment, energy productivity, carbon productivity, as mentioned before by the previous 2 presenters. But it also about safety record and also about executive gender diversity and board racial diversity. This is becoming more popular, especially since the American incidents. Now, if you are in the world of sustainability, you will also hear about the famous Blackrock CEO Letter. So Larry Fink wrote a letter to the CEO for the companies that the Blackrock invested in. So basically, more each year they encourage the company that they are interested at to report on ESG. And then more pronouncedly, I think now they want the companies to report on the climate risk, which is as mentioned by Brad earlier, it was using the TCFD standard. Not only BlackRock, Blackstone also doing the same thing. So almost all investment company right now they have over 3,500 investment companies signing up to a principle of responsible investment. In principle, they promise that they will use environment, social, and governance metrics as a screening when they decide where to invest their fund. Now, what happened in Indonesia? In Indonesia, there is a regulation issued by the Financial Security Regulator, the OJK. It's called the POJK 51 in 2017. Basically, it mandated all financial service institution, bank, insurance, pension fund, etc., gradually from 2019 to 2025 to issue a sustainable finance action plan, which basically outline how they transitions to be more sustainable in their financial service practices. And second, to all financial service institutions and to all listed company at the stock exchange to issue a sustainability report starting in 2020 to be submitted to the OJK. For the listed company, it's mandatory to submit sustainability report by 30th of April 2022 for their for those who never submit one. The first time should be not after the 30th of April 2022. So it is mandatory now in Indonesia. So if you ask why it's important, there is a McKinsey survey in 2017. But basically, right now, almost everyone says that, oh, it's aligned with our goals. It's about reputations. It's about operational efficiency. It's about meeting the industry norm and so many reasoning. But more and more companies says that this is about our corporate values. This is about our goals and about our mission. So what is sustainability? So when we want to learn about sustainability, we will refer to the definitions from the Brundtland report. So sustainability is about sustainable development. It's about meeting the needs of society while living within the planet's ecological limits and without jeopardizing the ability of future generations to meet their needs. So basically, you can do manufacturing, but you should not harm the the opportunity of the future generations to do their economic or their livelihood. So what is sustainability report? So sustainability report is an organizational report that contains information on a company's economic, environmental, social, and governance performance. In brief, it reports about your impact on this E, S, and G. Sustainability part is also encouraged through the Sustainable Development Goals or the SDG. It even has a target on its own. It's the SDG target 12.6. Basically, it encourages countries to encourage companies to adopt sustainable practices and do sustainability reporting. So now let's take a look at the GRI standard. Sustainability reporting according to GRI, it's based on these three principles. So first, you need to do stakeholder engagement. So the material, and then you need to do materiality analysis. Materiality means that what is most important on the aspect of sustainability that you need to pay attention. And then once you did these two pathway first, the stakeholder engagement and the materiality analysis, then you will open the GRI standard and select the standards to report on the materiality topics that you have chosen. So how to do materiality analysis? This one is just a guidance from GRI. So basically, when you do materiality analysis, it's to determine which relevant topics are sufficiently important or essential to report on them. You need to do two-dimension analysis. So the first one is the vertical line is looking from the opinion or the significance of an organization, economic, environmental, and social impacts. Sorry, that's the horizontal. And then the other ones is hearing from the stakeholder opinion or assessment or decisions about your environment, social, and governance impact. So next, we have 34 topic-specific standards. It's divided on the economic topic-specific standard, environmental, and social. According to GRI, you don't need to report on all 34, but you do need to look at your materiality analysis and also look at the stakeholder analysis. Now, with Indonesia and more countries is making sustainability reporting mandatory, it also means that everything that is outlined by the regulation, it has to appear on your sustainability report. So you cannot say, oh, my materiality analysis doesn't say water is important, but the OJK regulation says that water is important. So it means that water should be reported by you because it's already mandated by the national regulation. So what is the content of GRI standards? So for example, if emission is material for the company, you need to open the GRI standard 305, and then you will look at these 7 subtopics for disclosures. And then when the previous presenter says about scope 1, scope 2, scope 3, actually the same thing with the national regulation. You do need to report on emissions. It would be good if you report on scope 1, scope 2, and scope 3. The national regulation, the UPHxACCA, asks you to report on emission intensity, and it also asks you to report on your efforts on the reduction of emission. Okay, and then is that enough? No, it's not enough. Please open the text. We have a reporting requirement. You need to comply to the reporting requirement, basically the one in the box. So you need to explain about the calculations for the intensity, the denominator that you use. In principle, this is how you navigate through the GRI standards. So when you decide the material topic, please open the GRI standard related topics, and then please open its reporting requirement for each specific topic. And then reporting recommendations means it's a recommendations on how you should present, or sometimes about how you should calculate or respond to the reporting requirement. If you are confused, you can open the guidance. We also have reference to navigate and to understand better.
Ibu Lani, so sorry to interrupt. You have 1 more minute, ya, Bu?
Yes, correct. So this basically the landscape. You see earlier we have the CFP. We have many more standards. We have CTP. We have integrated reporting, and then the upcoming we have the I think the International Financial Reporting Standard is going to issue, and this is the landscape. So you will have the standard. You will have the data users. You will have the analysts, and you will have the consulting like the AWR Lloyd. So yes, I think you can save the word, but you need to learn about sustainability reporting. Thank you.
Thank you so much, Ibu Lani. And now we arrive in the sections for the question and answer, and we will be getting all these informations about the questions. And feel free, if there is something specific that being addressed to one of the speaker, perhaps the speaker can pick it up, but otherwise anyone also can join and perhaps adding something to the Q&A sessions. So I would like to have the summary of the questions right now to be presented. Is that ready already with the questions?
The questions is in chat box. Yeah, the first one from Ifani.
It has been summarized now. So this is from Ifani Wardana in UPH Medan. Do all corporations in Indonesia, including the government of Indonesia, utilize GRI in their financial statement? If not, is there any kind of organization that utilize this GRI standard? And then there is also a second question from Karin Zanetta from UPH in Lipo Village. Does good corporate governance actually have to be fully disclosed? Then how about the effect on the stakeholder? Right, so feel free to ask the questions, but perhaps the first question on GRI, I would like to ask Ibu Lani to answer that. But for the second questions, I think everyone can just pitch in for that. Thank you.
So the GRI standard is global standard. We do not infringe on national regulation. So basically, if you are a company registered in Indonesia and you are a part of the listed company, you need to comply first with the national regulation, because if not, you might be taken out from the stock exchange. So that is one. But then if you do use GRI standards, so basically it was the OJK, what do you call it, verbally said, and almost in all stock exchanges in any other countries, if you use GRI standard, it is considered as already in compliance with the national regulations. Despite that the OJK regulation is sort of new, but in Indonesia, we have the first sustainability report issued by, I think, KPC in 2006. And then it's growing. Right now, we are at this one. This year, we only track to the listed company. We now have 100 sustainability report issued by listed company, despite that it's not yet mandatory. Okay, next. Ibu Gracia is frozen. Oh no.
Yeah. Okay. Can you hear me clearly, or it was coming in choppy? Because
no, it's okay.
It's fine.
Yeah.
Okay. All right. So yeah, just to add a little bit on the comment, in many other countries that do not have really very specific regulation.
We lost Ibu Ugut ya?
Yeah, we lost Ibu Ugut.
Yeah, I think we lost Ibu Ugut.
Maybe we should just go to the second questions, given the time. It's, already.
That'll be great.
Okay, maybe perhaps I would like to chime in on the second questions from Karin Zaneta Halim from UPH Lipo Village. Does GCG actually have to be fully disclosed? Then how about the effect on the stakeholders? And in terms of the first part of the question, have to be fully disclosed, I would flip the questions. I don't recall any reasons why a company do not want to disclose their GCG, and I believe that will be the minimum standard from now. As I've explained in my presentation, the investor or the stakeholder are getting smarter, and they have a lot of access of information, and they can investigate different companies instantly with the technology and all the data that is available online. So short answer to the first part of the question should be yes. And the effects on the stakeholders on the GCG, I believe I've read some research or some articles there. Some of the students are investigating the impacts of the GCG to the value of the publicly listed companies, and it actually shows a significant positive correlation between the values of the companies with the GCG implementation as well as the disclosure. So in short terms, that will be a positive impact on that. Ibu Ugut, I think you're still on mute.
Okay, thank you, Pak Aditya. Perhaps, Mr. Brad Danik, do you have something that you want to add to that about particularly on the transparency, the sharing of the information about the good corporate governance practices, among the companies that listed in the stock exchange?
Only just to, in seeing some of the other questions listed, to reiterate that the GRI standards provide kind of that benchmark for companies to disclose. And that normally it's pretty clear what standards they can use for accounting, so they understand what to report. And that typical best practice, maybe even required best practice, is to have that sustainability information audited before you publish it in the report. So there are good systems in place to make sure that the data is valid and that it's material to stakeholders, including investors and shareholders.
Yeah, Bu Ugut. Maybe we can go to the next question, if that's okay.
Yeah, I think we can go to the next questions now. Questions from Gabriela Michelle at UPH here. Thank you for the wonderful session. I would like to ask Mr. Brad Denning, according to the going concern of mining companies, as we know that in order to achieve sustainability goal, financial disclosure must be compiled together with non-financial disclosure with a two-way relationship. Companies have the tendency to generate higher profit while also maintaining its costs. Using coal as one of the cheapest resource may be the alternative for the companies that undergo any going concern issue. If they are forced to utilize much more sustainable resources, such as solar energy with a higher cost, how should companies react to the decisions between profit and sustainability? So related with the first question, how should mining companies manage and disclose any related costs incurred properly without any hidden costs to ensure that fairness and transparency of their non-financial disclosure? Thank you. I think these are the questions, despite that is addressed perhaps to Mr. Danik. Mr. Danik, you can take the first chance to answer this, but I believe Pak Aditya and Ibu Lani also can join in giving their perspective into these questions. Please.
It's a great question. I think looking at it from a mining company's point of view that mines for coal and sells coal, they may not be forced, the key word is forced, they may not be forced to do so. This is where something like TCFD is so valuable. It allows corporate executives at that coal company to look at what scenarios might happen. There might be a scenario that's, call it very green, right? Where every country really decides to pursue a price on carbon, subsidize renewables, that there's a breakthrough in energy storage technology. Everything happens that makes it very green. There may be a middle scenario and you have a strategy for that. And there may be a scenario where countries don't act very strongly on climate. So you use something like TCFD to just understand what scenarios may play out and prepare a strategy for that. So again, they may not be forced to move. In some cases they may, but a lot of times when companies are shifting from coal, it's because they see, quote unquote, the writing on the wall, right? They start to look long-term and they see the shifts happening for them. So I think that's, that would be my main kind of takeaway, but I'd like to share the floor with my fellow panelists.
Right, thank you. Pak Aditya and Ibu Lani, perhaps you can add something to this.
Maybe just would like to emphasize what Brad has mentioned earlier, that it may not be forced, but eventually these are non-renewable resources, and at some point it will be declining. And in terms of the pricing, if you recall, the coal price recently, it's actually increasing now. It has almost even reached more than $100 per ton as of several days ago. So it may not be the case anymore in the future, as well as Brett mentioned, it's part of the scenario planning of the companies, where perhaps it's also, I would like to also quote the government portion or the government influence on their strategy, on their impacts, and the government may also offer some incentives to the green or cleaner energy. So that will also impact in one of the way, not forcing the company, but in terms of their internal evaluation and strategic decision making, it will impact them. Maybe that's all my addition to what Brad mentioned.
Thank you. Pak Aditya, Bu Lani, you want to add something to that?
So, coal is special case, especially for Indonesia. It's a little bit political, and
I know.
Want to. So basically, if you are a European company and you sort of maintain that you are going to stay on coal, you are going to be dead. But if you are in the Asia, if you say you are going to stay on the coal for, let's say, until 2050 or something, there is a big possibility that you might survive, but at more, I think, at less profit than before, because the trend is it is going down, the usage of coal. And then the other problem is that why DCFD is necessary, because there is a risk of carbon tax. So meaning if you stay on coal, and as you can see from Brad's presentation, which highlight like coal is 10 times than copper, and then the scope 3 is so high. So basically the tax is going to be 10 times higher year by year and maybe more. So so you need to think long term. So that's why doing long-term planning for sustainability is very important. So if you still think that the coal price is very high now, yes, it's very high because industry is getting up and getting busy. Of course, the price is going to be high. But if you are thinking about 20, 30 years, you might have to consider seriously for your long-term plan.
I agree completely, Bulani, and also what had been shared with by Brad and also by Pak Aditya. Scenario is planning is very important because the matrix is not being imposed yet at this point in time. I just want to draw this kind of analogy that quite similar to what we are talking about the sustainability reporting now, with the early days when we kind of imposing many of these regulatory and also research that at the university, they're talking about how important the risk management for the banks. And part of the financial report has to also include all the information about how do you measure your risk, your market, your credit, and your operational. And you have to be transparent about that. Of course, bank was hesitant to say that I have to pronounce to the whole world that our NPL is so high, non-performing loans. This is not acceptable. That's why the first questions about like how you communicate is becoming very important. But also we have to also to show that our yardstick that we are using, metrics that we are using, even that the scenario planning for the extreme events, it has to be also declared that how do we arrive into that, you know, what are the methodology that we are using. So I think the sustainability is almost going to the same kind of path in terms of the path that had been really the journey for most of the financial institutions when they embrace the regulations about risk management, which is actually causing so many crises. Now we have climate crisis, we have also, well, there are some deniers, but you know, we know that, I mean, we have more floods right now, we have longer season of a very dry season, you know, and a lot of kind of changing in the habitat of many of these animals that creating a lot of problems actually for the human being at this point in time. Yeah, coal is politics, but coal is also commodity. The coal price right now, in my opinion, they're going up right now because they've been in the cycle of 12 years of the commodities. If you recall, the highest oil price was in 2006, right? At $146 per barrel. It never happened again. During the pandemic, even that, you know, with all the, you know, storing and all those kind of things, even the oil is actually negative. You know, nobody wants to store that oil. So now we come back because seems like vaccination working, you know, but that will not change the fact that relying on coal is basically is very unstable because this is commodity that will have all this one whole cycle of peak and valley in 12 years. So one of the contributions that is going up, not because it's so much in demand or it's because it's cheap, but it's going to go up because like when other commodities prices also going up after 12 years. So I think there is always an incentive to be, what do you call that, to come transparent and also, you know, following the right things to do in the longer period of time. The metrics is very important. I like the discussions on the metrics that being brought up by Brad, but also that aside from the metrics, which is all measurable, we have also to see the quality of the sustainability. That's why GRI is very important because they also talk something that soft on that side, like commitment of the board, you know, how to do the stakeholders, you know, management, how do you engage the stakeholders, communications with stakeholders. Those are the points that actually were not very much captured by the number, but both make it really balanced to go to further development of the right framework for all this, I think, the issue of the sustainable investing. Okay, do we still have any other questions?
We do have other questions, Ibu, but unfortunately we have very limited time. So Unfortunately,
Can
we
still
have to
have
end
one
it now.
or two. Then after that we close and then we go for dinner after that.
Okay, if other speakers are okay with that, we are okay with that. Okay, then we
Just
can have
one question.
one more
Okay. Yeah.
committee to share the question.
All right. Will it take so long?
Ibu
Is
Sadia,
it
can you
because
share?
my laptop is so slow or is there already? There you are.
Yeah, it's uploading.
Okay. Oh, this is Budi Kurniawan from Kalbis Institute. This is another school. For Mr. Brad Denning. Where did the data for calculating the metrics come from? Did companies provide the data or they use the third party to help them providing this data? How do you know the data are reliable? And then for Ibu Lani, the question is that one of the usefulness of the financial reporting in its comparability. Regarding sustainability reporting GRI, can we state in confidence that we can compare different sustainability report from various companies? Yeah. Brad, perhaps you can answer the first questions, and Paditya, feel free if you want to add also. Yeah, to both questions, please.
Sure. So for the first one, very briefly, I think the data came from sustainability reports that the companies, they themselves published. And normally the metrics they used are from GRI and that it was verified. The second source is Carbon Disclosure Project. So that's really of information. And then third, and one company I think that's really quite good in disclosure is BHP. So if you look at BHP Billiton's public reports on climate change strategy, they're really quite good, and they give a lot of insight into how they're thinking about the future when it comes to climate in their business. So yeah, that'd be all.
Yeah, I think that's very important also because they can really, part of their, what do you call it, report is also include their scenario, how they see the future. That's why the strategy will follow. Ibu Lani, perhaps you want to answer the second questions?
Yeah.
How to make it comparable with sustainability report?
Yeah. So when you use GRI, when you use GRI standard for your sustainability reporting framework, you are making yourself comparable to the rest of the world, to put it bluntly. So that's why we promote the use of GRI standard along with the national regulations, because it will basically your investor is not coming only from Indonesia. The reader of your sustainability report is not only the government, not only OJK, but the first reader of your sustainability report is, for example, like somebody like Brad. He reads the sustainability report. The investor, as you can see in my slide before, the data aggregators, they mine the data from sustainability report, and then they come up with rating that gives you a marking whether you are, performing well or not performing well. And then the investor also mine your data so that they have a decision whether they should invest in your company or not. So using the GRI standards will make the reports more comparable. Now, the problem is not with the standard or the national regulations. The problem is with the capacity of preparing a sustainability report. The standard is there, but it depends on your data availability. It depends on how much you want to disclose on your sustainability report or on your transparency practices. And it also, so basically, if we say we take a village to raise a kid, we also take the whole company to prepare a good sustainability report. So yeah, so the problem is with the quality of the data prepared for sustainability report. The problem is not with the standard, I think. Well, we've been here for 20 years, yeah.
Yeah, I think I agree because, sometimes the standard is there, but there is no commitment from the board, so they choose and pick which one that they want to declare, and all those kind of things. So, but also actually, please don't just think about the reporting. This is actually a management tool. that can be used actually for individual company to do self-assessment. It's like when you do self-assessment for your tax, because tax authority usually will use the self-assessment before you go to the tax office and saying that this, then they will verify. So this is very important also, that to see that GRI actually can be used for that purpose, you know, and from time to time, I believe everybody is very important, you know, like to have that kind of feedback, you know, for what is their performance every year following the GRI standard. Pak Aditya, would you like to add something perhaps to the question number 1 or question number 2?
Yeah, I just would like to add a little bit on Ibu Lani's comment there. It's very related to the result of the research on the ACCA second paper that shows the disclosures of the risk related to climate change in extractive industries. And exactly what Ibu Lani is saying is about the resources or the intention that they want to disclose those in the non-financial disclosure is very limited, and that is relatively shown in the research done by the ACCA. And just would like to add some notes there. It doesn't matter actually what industries you're belonging to. Yeah, the focus is on the extractive industries because the focus is there. The impact to the climate change is very much prevalent in the industry, but even though you're a service-related company or a manufacturing company, you also have those carbon prints as well. And it does not mean when you're working or you're in a service company that you're free and from the obligation or duty to maintain the sustainability of our environment. I think I just would like to add that comment as well.
All right, thank you very much. So time is up. I think Budam is already kind of really waiting. Yeah. So I would like to thank all of you for this fascinating discussions. Perhaps we can arrange for another opportunity to do this. A lot of the technicalities issue and also the strategic issue that we can have out of this kind of issue of the sustainability. So once again, I would like to thank the 3 panelists of this evening, Pak Aditya and Mr. Brad Denick, and then Ibu Lani Haryanti, for giving the different perspective into the same issue that actually will complete our understanding about the issue at hand. And this has been actually mind-boggling because people kind of really waiting that whether this is a serious, that worth the investment of time and energy, or is just something fad or fashions that, you know, that will disappear perhaps after some times. But given that the GRI has been around for more than 20 years, you know, that will tell you something that there are more actually in terms of reach earlier than many companies adopt this kind of reporting, and also companies that are big like ConocoPhillips also taking it very seriously. Of course, oil company is always in the serious situations for this ESG, but I believe the approach that being shared about scenario planning, metrics to be used, and you know how you have the strategy as a response to the scenarios that you have is also very important. And we thank that they need to bring that kind of quantifications to the issue of the, you know, environment performance. The social performance is actually, we don't have enough time actually to discuss. So what does that mean? Like how you treat your employees, you know, like, well, anyway, that's a little bit more complicated. And I think Ibu Lani is also very clear by saying that you have to meet with the national requirement and then you go for the international standard. But I tell you, my experience with dealing with many of the countries in the Middle East, the national standard not necessarily is actually in line with what we believe from the UN Global Compact, for example, or COP24 before, or others. Like, for example, this is just food for thought for us, that many of the foreign workers that working in the Middle East, their passport is always being confiscated by their employer. Now, for them, that is national standard for safety, they said. But in the eyes of the world, that is like slavery, you know, like, what? You cannot have your passport on your own? This is something that we can still explore, you know, like a lot of things that still have to be clarified in so many of these different gray area. So once again, Ladies and gentlemen, thank you very much for the event, for the contribution, for the questions, and we do hope, Ibu Hani, that we will have another opportunity with ACCA, perhaps with the same speakers, with a different combination of speakers, to talk about this more often. Once again, thank you for everyone, and also thank you for the team in the business school of the Universitas Pelita Harapan. Thank you and good evening.
Thank you so much, Ibu Ukut, Ibu Lani, Brad, and Mas Adit. Looking at the enthusiasm, kayaknya akan ada ini ya Bu, volume 2 of this event.
Boleh.
Hopefully ya, we can create soon ya Bu.
Ya, soalnya sekarang kan gampang, bisa pakai Zoom, bisa pakai apa. I mean, really, you don't have to travel, and conduct the seminar in person.
Yes, that's correct. So, okay, I would like to continue to this event, but also would like to remind you all to stay still until the end of the session, because we will share the link of a feedback form where you can get the e-certificate after the closing prayer. So, ladies and gentlemen, now we have come to the end part of today's event. We would like to give the token of appreciation for all the speakers and moderator by handing over the certificates symbolically. And for this, I would like to invite Ibu Hani Karunia.
Okay, thank you, Ms. Dames. So yeah, once again, we really thank all of our esteemed speakers today. Okay, so the first certificate of appreciation. This is the first time we're giving it virtually. Usually we, just send it physically. So yeah, itu to Mas Bapak Aditya Fadriansyah, ACCA or ACCA member. Yeah, this is to recognize to your generous contribution as a speaker today in our webinar, the trending critical role of non-financial disclosure in financial reporting. Thank you, and we hope to see you again. And also, this is our second time collaboration with Mr. Brad Denick. We also really thank for his insight and also his expertise in this webinar, and I can hope that he is willing to, share again with us in the future. And I think Brett also probably can vouch that today's webinar we have really quite overwhelmingly interest that we can see from the incoming questions. Yeah, especially compared to our first webinar, right, Brett? So yeah, this is hopefully there will be another chance. And yeah, so last but not least to Ibu Lani Haryanti. So for Ibu Lani, thank you Ibu Lani. Semoga juga we can see you again for another opportunity. And as we've had discussion before, and hopefully ACCA also and GRI will have further kind of a partnership or collaboration as well at some of other events. Yeah, thank you Ibu Lani. Okay, and of course to our very own esteemed moderator, I would say Ibu Ugut here, Professor Ugut, Gracia Sinta S. Ugut, MBA, PhD. Thank you again for your sharing, and also I really appreciate that your time today to have this discussion. I know that you are a very busy also. So yeah, thank you again, and hope to see you in other collaborations or event that we're going to have with UPH. Terima kasih, Ibu Ugut.
Yeah, thank you for having us today. And yeah, perhaps we have to take a picture right now.
Oh,
then,
thank you, Ibu, for
then we close
the next session.
Prayer,
so, yeah, we will have a photo session together. So I would like to ask everyone to turn the video on so we could memorize this lovely afternoon. Let me give about 5 seconds for everyone to turn on their video. I'll stop sharing first. And for the committee, appreciate if you could help to screen capture the participants.
Thank you, Bu Dames. Everyone, I will count to 3. Please smile. 1, 2, 3. Okay, please wait a minute. 1, 2, 3. Okay, thank you, Bu Dames.
Thank you so much, Bu Sadia. So before we end this session, we would like to invite Ibu Yeni Martok, the BA, FE, MM, MBA, to give us the closing prayer. So for Bu Yeni, the time is yours.
Oke, saya akan berdoa dalam iman Kristiani. Silahkan yang lain boleh mengikuti menurut keyakinan masing-masing. Father, we want to thank you for being with us throughout this seminar. Your presence has been in this place from the start to the end. Thank you, Father. God, as we leave this place, let us go out there and be the salt and light. May we can learn from this seminar the critical role of non-financial disclosure in financial reporting. We will not have done it without you because it is you who establishes our plans. May what we have learned impact our work and our life. In Jesus' name we believe and pray. Amen.
Thank you so much, Ibu Yeni. So now I'm highlighting the feedback form link that is available by scanning the QR code, or you can also visit the link from the slide. Please scan or visit the link to fill in the feedback form for you to get the e-certificate of today's event. I give about another 3 seconds. Okay, so ladies and gentlemen, we have come to the end of today's event, the trending critical role of non-financial disclosure in financial reporting. We would like to thank everyone for gracing this international webinar event with your presence here today. And we do hope that you can reap some benefit of insights and knowledge that were shared in this session earlier. So thank you for listening. Terima kasih. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Thank you.
Thank you so much, Mas Adit,
Thank
Ibu
you.
Ubud,
Thank you.
Thank you so
Mbak
much.
Brad,
Dames,
and
Ibu
Ibu
Ubud.
Thank you so much.
all the
Nani,
committee, Bu
Pak
Sadia,
Agus,
Bu Elvina, Bu Wijaya, thank you,
Thank
Pak Anton,
Jonathan,
Bu
terima
Terima kasih
Yeni.
kasih.
Thank you so
semuanya,
much.
Mas
Bye
Aditya,
everyone.
Brad,
Thank you.
Ibu
Take care
Lani,
semua,
Pak
Thank
sehat
you.
sehat.
Thank you.
Thank you.
Jaya.